All right, hi guys. Hope you're all well. Thank you for attending my monthly webinar. We had NFP out on Friday, as I'm sure you all know, and the whole point of this webinar really is to see how NFP has affected the actual trend of certain pairs that I've been looking at, and if there has been anything of significance. If there hasn't, then what does that really tell us about NFP? So that's the whole point really of today's webinar. We really want to focus more on the bigger picture and not knuckle down to this monthly news item where, excuse me, where a lot of people, feel is a significant time of the trading month when, really it isn't. So what you can see in front of you, as always, is my regular screen setup. I've got the watch list on the left-hand side. So that's the Aussie dollar, going all the way down to the South African rand, Japanese yen. So a very extensive watch list. I've got the monthly time frame in the top right corner. I've got the weekly time frame in the bottom left corner, and I've got the daily time frame in the bottom right corner. Excuse me. Now, at the moment, what you're looking at is a naked chart. No indicators on there, nothing, just purely candlesticks. If I move across to this page, what you can see now is the indicators that I use, and regular attendees to the webinar will be familiar with this page. This is the regular page that I have, and what we can see now are the few indicators that I have up on the screen. So the monthly chart shows the major areas of support and resistance that I look at, which are denoted by these red and green levels. I've also got the high and the low and the closing price of last year, being 2014, represented as these pink levels. On the weekly time frame, I have the weekly 200 moving average. So the weekly 200 moving average really gives me a bias in price action. When above the weekly 200 moving average, it's a bull market. When below, it's a bear market. And I have my trend filter in play as well, giving me areas of bullish and bearish trend. And I use that exact same logic on the daily time frame. So I've got the daily 200 moving average giving me a bias in price action, and I've got the trend filter suggesting areas of bullish and bearish trend. Okay, so what I'm really looking for is the monthly chart to give me areas of space to trade. So I'm looking for clear areas of space for price to target. And I'm really looking for thousands of pips, not 10, 20, hundreds. I'm really looking for areas that can allow a trend to develop over thousands of pips. I then use the weekly and the daily time frame to give me trend direction and bias. So in a bear market, I want price to be below the weekly and below the daily 200 moving average. And I want the trend filter to be red on the weekly and daily. And in a bull market, I want to reverse that logic. So I want to be above the daily 200 moving averages on both the weekly and daily. And I want the green trend filter on both the weekly and daily time frame. Okay, so that's a breakdown of my chart setup. Can I just get a quick yes to make sure that you all understood that? Yep, okay, yep, thousands of pips, black cat, not 1,000, thousands. Okay, that's the whole. Just to give you a brief background on myself, because I can see there's a few new people in the attending today. I'm a trend trader, so I'm looking for long-term positions. So I'm not looking for a few pips. I'm not looking for a handful of pips. People from a day trading or scalping background will have a different approach, but I'm looking for thousands of pips here. Okay, so that's what it means to be a trend trader. So let's start with the Aussie dollar, US dollar. So I'm just going to go back up, open up the Aussie dollar, US dollar. Okay, I'll start with the monthly time frame, and we can see that price was stuck in this area of consolidation. Again, regular visitors to my blogs, to my social media sites will have known when I was talking about this, and this is going back to 2014. Let me just bring up my crosshairs. Okay, sorry about that. Right, so now you can see my crosshairs. And we can see that price was stuck in this prolonged area of consolidation for several months, really. If you look at price action at the bottom, if you look at the data at the bottom, we're looking at June 2013 all the way through to September 2014. So you're looking at a year and 3 months. The longer the consolidation, the bigger the breakout. So once price broke below this pivot level, we could then expect the trend to develop. And this is when I first looked to enter the market. And we can see that since then, price has gone on to create lower lows. It's trading below the low of 2014. It's trading below the low of 0.80. So what we're looking for now is price to start targeting round numbers, 0.7, 0.6, 0.5. And if you look at if you look at past price action, you will notice that all these major pivot levels are all associated to round numbers. So if you look at the highest point, that's 1.10. If you look at this pivot level here, that's around 1. If you look at this whole support resistance level, excuse me, my screen's just gone blank for some reason. Okay, guys, just bear with me a second. Looks like my screen. Okay, here we go. That was strange. That's never happened before. Okay, so if we look at these pivot levels, we've got the high point associated to 1.10. We've got this whole support and resistance level associated to the figure 1. We've got this level here associated to figure 0.9. The lowest point is associated to around 0.50. So you can see how price reacts with round numbers. And round numbers, and this should answer someone's question earlier, round numbers are every 1,000 pips. 0.9 to 0.8, that's 1,000 pips. 0.8 to 0.7, that's 1,000. 0.7 to 0.6 is 1,000. So I'm targeting 1,000 pip increments. So once I've entered this trade, I then start targeting the round numbers. So I targeted 0.8. Now I'm looking for price to target 0.7 and then 0.6. I go to the weekly time frame and the daily time frame to tell me if I do have a trend that is established in that direction. So if I open up the weekly time frame, we can see that we're trading below the weekly 200 moving average, and we've got that red trend filter in play, telling us that we have got a bearish bias and a bearish trend in progress on the weekly time frame. And if we look at the daily time frame, we're trading below the daily 200 moving average, and we have that red trend filter in place suggesting further weakness. Now, if we look at the actual structure of the trend on the daily time frame, what do we have? We have a trend followed by consolidation, then a trend, then a trend followed by a consolidation area, trend, consolidation area. So this is nothing more than what the trend has done in the past. But if we look at the overall direction of the trend is down. Okay, now, what are we looking for? What are we waiting for? Well, we're simply waiting for this trend direction to continue. And that will happen when we get a break and a close of this pivot level. Okay, so we did have a break below this pivot level here, but that turned out to be a fake breakout. Price reversed, and this is what's happened. Now, if you look at price action, this was Friday's bar. This is NFP Friday. NFP Friday, compared to the overall direction of the trend, you can see it was simply a day of added noise, a little bounce to the upside, but it has not caused a trend reversal or anything of significance. This is simply a candlestick in a whole range of candlesticks. Sometimes NFP works in your favor, sometimes it works against you, but if it works against you, price corrects and continues in the major direction of the trend. It doesn't generally cause a total reversal in price. Now, if you look at the actual trend structure, it started in September. We're now in April. How many NFPs have we had since then? September's NFP, October's NFP, November's, December's, January, February, March. So we're looking at 7 months, 7 individual NFP releases. Yet the overall direction of the trend is still down. Since then, we've just had noise, price trading within a certain range. What we're waiting for is the bear trend to really come in. We want the bears to take control of this market. When we get a break and a close of this pivot level, this will suggest a trend continuation, and we'll be looking for price to target 0.70. I have positions running since November. Okay, so I have 5 positions running along this trend. So I've got 5 individual compounds. When price breaks below this, I can then start looking to add further positions. Okay, so these positions have remained open since November. So you can see now how the pip total is starting to rack up. Can I get a quick yes, please, that you guys understood that? Yep. Okay. These are just basically pivot levels. Yes, that is correct. The green and the red levels, Their monthly pivot levels. Okay, let's have a look at another currency pair that I'm looking at. So Aussie dollar, New Zealand dollar. Start with the monthly time frame. Now, if you look at this trend, the Aussie dollar, New Zealand dollar was very, very profitable in 2013. And you can see that from this trend that was in progress. Several months of weakness. What we had was price bounce to the all-time low. Trend to the all-time low, going back to 2005, 2006. We then had a bounce to the upside, price corrected, and since then we've had further weakness. Price is now creating all-time lows. It's broken below the low of 2005, 2006, but it's now finding support at around number 1. And look at what we're having today. We're having a bounce to the upside, and that is because the figure 1 is acting as support. Now, guys, remember, this is not a trend reversal. A trend reversal will only take place once price has confirmed that. At the moment, this is simply indecision based on figure support. If we go to the weekly time frame, we're trading below the weekly 200 moving average, and we have the red trend filter in play. And if we go to the daily time frame, we're trading below the daily 200 moving average, and we've got the red trend filter in play. If we look at the structure of the trend, now I had my first position triggered in February around this level here. If I just move back price action, I had my first position triggered around this level here. Now look what happened next. Price went against me, then for me, then against me, then back in my favor. So price was stuck in this area of consolidation for several weeks. Now this is part and parcel of trading. The mistake that a lot of people make when they first come to trading is that they want to return a profit as soon as they've entered into a trade. But a trend is a function of time. If you eliminate time, you will eliminate the trend. If you eliminate the trend, you eliminate serious profit. And I'm not talking about just a little bit of profit. I'm talking about growth on your trading account, the kind of growth which will then allow you to quit your 9 to 5 if that is your goal and to become a full-time trader. That can only be achieved by letting your winning trades run. Now, putting risk management aside, whether you're risking 2%, 5%, 10%, whatever, the longer you stay in that trade, the more profit you make. So you want to be able to stay in that trend for as long as possible. Okay, so you can see that by riding out this consolidation period, and I have pretty wide stop losses. Okay, price then went on to hand out profit. So I've got multiple positions all in very good profit. Now what's happened is that price has bounced to the upside. That is because of the figure support. This is not a trend direction change. What I'm looking for is price to correct and for the figure 1 to be broken and then price to target 0.90. So that's another 1,000 pips. If price reverses and stops me out, well, I have stops in play. I've got profit locked in. It won't be the most profitable trade for me, but that doesn't matter. Over the long term, I'm looking for larger trends in the market. Okay, so excuse me, Aussie dollar, New Zealand dollar. If we actually look at NFP actually worked in our favor on this particular pair. You can see a big drop in price. So we had a drop of about 100 pips in the favor of the trend on NFP Friday. And say, for example, I've got 5 positions running. I had 500 pips added to my pip total because of compound growth. Okay, so by having having multiple trades running along the length of the trend, you start seeing exponential growth on your account. And that's the techniques of people like Warren Buffett, George Soros, the turtle traders, all the guys that made money through long-term investing. They've enhanced the power of compound growth, and that's fundamental to trading and investing. Okay, let's move over to the euro dollar. Euro dollar. Well, the euro dollar I've been trading since September. So the euro dollar has been a feature of every FX Street webinar that I have done dating back to September. Okay, if we look at the monthly time frame, we can look at the trend on the monthly time frame. Price found resistance at 1.40. Now again, look at the pivot levels: 1.6, 1.5, 1.4. All significant round numbers, all acting as pivot levels. So it shows how price reacts with round numbers. When in a trend, we can use them as targets. So when price found resistance at 1.4 and started coming down, I wanted it to target 1.3. When it broke 1.3, target 1.2. Now that it's targeted 1.2, it's targeted 1.1. We are now retesting that 1.1 level. I want this to hold strong as a resistance level, and I want the trend to come in and target 1, 0.9, and 0.8. And if we look at past price action, it's actually been as low as 0.80, dating back to 2001. What's happened in the past is a good indication of what can happen in the future. Weekly time frame, trading below the weekly 200 moving average, and we've got the red trend filter. Daily, trading below the daily 200 moving average, and we have that red trend filter in play. So everything is suggesting further weakness, despite the pullback since March. I've got positions running since September. I've got multiple positions running since September, along the length of this trend. But if you look at the structure of the trend, there's periods of pullbacks. The trade doesn't just move in one direction. There are these pullback and these breather areas. Being able to hold your trades through these breather areas is where the real challenge and where the psychology of trading comes in. The psychology of trading really just means understanding natural market movement, and when price is going against you, to really hold your positions and to be patient. It's not that difficult. Most people put a lot of emphasis on psychology, but the emphasis is really in understanding natural market movement. If we look at price action now, what we had was a break of 1.10, a pullback to retest that level. We've had another retest of that level. So potentially what we could be seeing is a double top at the round number 1.10. What does that mean? Well, a double top, if confirmed, and the confirmation will be a break of this pivot level, will mean a continuation of the downtrend. A double top in a downtrend is a continuation pattern. This is something that many people are unfamiliar with. A double top in a downtrend is a continuation pattern. So what we're looking for is that double top to be confirmed. And that will happen when we get a break of this pivot low. When we get a break of this pivot, we will then see a continuation of the downtrend. What we need to do is let price just play out. If we look at NFP Friday, okay, I can see questions coming through. I'll check them in a second. If you look at NFP Friday was this bar here, and all it was a pullback to the round number 1.10, where it found resistance. Again, very insignificant in the overall direction of the trend. NFP means very little when you're trading in the direction of the major trend. And this should really emphasize that. Price is now heading back down. If we get a break of these pivot levels, then we're seeing a trend continuation. For now, you really want to be standing aside. I have my positions running from September. I have a trailing stop loss in play with very good profit locked in. Okay, I'm just going to go to these questions. Do you add new positions at those pullbacks? I don't add on pullbacks. I prefer to add on breakouts. Different traders trade with different philosophies. This trend is not really allowing for pullbacks. These are not very clean pullbacks. People tend to get obsessed with pullbacks, but breakouts are a far better way to trade because they confirm the trend. When you're breaking pivot highs and pivot lows, you're continuing in the trend. Whereas a pullback, how do we know it's a pullback, it's a trend, whether it goes into consolidation, whether the trend is changing? There's a lot of variables involved. So breakouts tend to be far better than pullbacks. That's just my personal approach. At which point do you kill the positions? I don't kill positions. I'm assuming you mean being stopped out. Yeah. Since you said it's normal to have pullbacks. Yeah. Okay. Well, I have a trailing stop loss in play. Now, remember, you've all heard of the expression confluence of events. So people have confluence of events to get into a trade. You want to have confluence of events to exit the trade. So I have exit management system allow me to exit at the correct level. I don't want to be exited too early. Okay. So remember one thing, guys, in trading, the exit is far more important than the entry. Anyone can find an entry point, breakout, pullbacks, lower time frame. But the key to making money is being able to stay in that trend for as long as it's in play. And that means understanding how to exit once in the trend. And you really want price to dictate that. You don't want to second guess. You want to let price to dictate when you exit. Okay, so I have a trailing stop loss in play. Yeah, okay, how to determine the correct exit level. Again, exits, If you guys want to know about how exactly I exit, then that really involves sort of getting in touch with me and talking to me on a one-to-one basis. But I have exits. I have several ways of exiting, and I don't really go into exit management too deeply on these webinars. But what I can tell you is that I use trailing stop losses, and I use the average true range as well to guide me on how to use stops. Okay, let's move on to the next currency pair, Euro Pound. Okay, Euro Pound, when it broke this support level, and this again, regular viewers to my webinars will know when I mentioned if price breaks this support level, it'll target 0.70, and that's exactly what it targeted, 0.70. We've had a bounce to the upside in the form of an indecision candle, and price is now heading up. Again, this is simply a breather in the direction of the trend. This is not a trend change. Weekly time frame, we're trading below the weekly 200 moving average, and we have the red trend filter in play. Daily time frame, we're trading below the daily 200 moving average. We had this clean trend. Price found support at 0.70. We had a bounce to the upside. Look at what price is doing now. We've got a double top formation at pivot resistance. Double top will be confirmed when price breaks and closes below this level, and we'll then like to see price this pivot level, a break and a close below here, and we should expect price to target 0.60. Okay, so the Euro Pound for now, nothing more than consolidation. Now, if you look at NFP, again, this was NFP. This bar right here, this was NFP Friday, an insignificant day in the overall direction of the trend. Price is now correcting itself. If it breaks this pivot and this pivot, we will then be in a trend continuation. Okay, Euro New Zealand dollar. Open up the monthly time frame, we can see that the Euro New Zealand dollar is trading below the support level, this all-time low going back to 2012. When price breaks an all-time low, it will go on to create new, and that is the direction that you want to be going in. And look at what happened. Below 1.50, major half figure, major round number, and is now finding support at 1.40. Again, a good example of how price reacts to round numbers. We're trading below the weekly 200 moving average, and we've got the red trend filter in play. And we're trading below the daily 200 moving average, and we have the red trend filter in play. Price is currently just going through an area of consolidation, nothing more than consolidation. This is not a change in trend direction. This is simply consolidation. We now need to exercise patience. We need a break of this pivot low. We need a break of 1.40, and price will then target 1.30. So if you're not in this, you really want to be standing aside. Now, again, look at NFP Friday. NFP Friday was this bar right here. The last candlestick you can see on the screen, that's NFP Friday. Again, insignificant in the overall direction of the trend. Okay, the last currency pair we'll look at is the US dollar Swedish krona. Okay, again, something that I've been trading. I've got several positions running on this. We can see that price broke above this resistance, which became support. Price broke above the round number 7. And it has since then gone on to create new highs. It's broken through the high of 2014. It's trading above 8, and it's now currently finding resistance just below 9. If price breaks above 9, then we can expect it to target this resistance, but ideally 10 and then 11. And if you look at this chart, price has been as high as 11 going back to 2001. Weekly time frame, we're trading above the weekly 200 moving average, and we've got the green trend filter. Daily time frame, we're trading above the daily 200 moving average, and we have that green trend filter. If you look at the structure of the trend, you can see how quickly it's moving. It's covering ground very, very quickly. So this is not really giving you any opportunities to enter in on a pullback. You really want to be entering on the breakouts, and you can see how well it has trended. It's currently just going through consolidation. We've had a move to the upside. NFP Friday, again, was a move to the downside, but nothing of significance. Price is now heading back up. A break of this pivot, a break of this pivot, a break of 9, and we should see a trend continuation. Okay, I'm going to go to a chat box. Do I trade gold or silver? Yes, I do trade gold or silver. Okay, let's have a look at gold, all right? And this is my take on gold. Again, I mean, it's a good question. People are obsessed with gold, maybe because gold is gold. But if you look at the actual chart, you tell me on a monthly basis, can you tell me what gold is doing? Do you think gold, from a trend trading perspective, is tradable? Yes or no? No, no. From a trend trading perspective, if you're looking at it from a day trading perspective, that's different. Okay, but from a trend trading perspective, we've just looked at the euro dollar, we've just looked at the Aussie dollar, we've just looked at the US dollar, Swedish krona. In the time that those currencies have gone on to plot higher highs, what has gold done? Gold has been stuck in a prolonged area of consolidation, and this is going back to 2013. So gold for me is not a lucrative instrument to be trading right now. Let's compare that to a stock that I'm currently trading. Okay, so here is a stock that I'm currently trading, KR. Okay, compare that to what gold's done. What do you think's better, KR or gold? Right. So this is fun, guys. I cannot stress how important this is, that you guys have to start really getting a grip of what is a tradable instrument and what isn't. You have to start ignoring all the noise that you hear on social media, on radio, on TV, whatever you guys listen to, the newspapers. You got to start ignoring all of that, because price action tells you what is tradable and what isn't. Gold is not tradable. Has handed out phenomenal profit, and this is going back to 2013, March 2014, when price broke above this pivot level. This is when I started trading this. Okay, so if I've got KR, euro dollar, Aussie dollar, all of these handing out profit, gold is something that you do not want to be interested in. Let me just bring up gold again. Okay, so if we're looking at gold, price is stuck in a consolidation. The earliest I'll be interested in trading gold is when it breaks above 1500. Until it breaks 1500, I'm not interested. Weekly time frame, trading below the weekly 200 moving average. Look at the consolidation. In the time that KR has plotted higher highs, what has this done? This has done nothing. This is stuck in consolidation. Now, if you're a range trader and you're trading ranges, that's fine. That's totally different. But range trading is not as lucrative as trend trading. If you look at this period of trend, look at that movement compared to this current movement. That should be an example of how trend trading is far more lucrative than range trading. Go to the daily time frame. You can see that we're above, in and out, above and down, above and below the daily 200 moving average. If we compress it, we can see that this is just messy. It's messy and it's choppy. So gold is not tradable. I'm not going to bring up the chart of silver, because silver and gold pretty much do the same things. So it's not something that I would be particularly interested in trading. Okay. In the same time, I've been trading crude oil. Crude oil has gone down from $90 to $50. I've been trading crude oil. I've held that whole trend, guys, from 90 all the way down to 50. In addition, when you know how to trade, commodities, you will then be able to trade the stocks associated to those particular commodities. So if you look at Tullow Oil PLC, this is an English stock. I've been trading this stock since price broke below 700. And I've held my positions all the way through to now, even through these consolidation areas. And you can see how much profit this has handed out. Okay. Yes, I can, Terry. I'll look at that straight away. Guys, is that clear? Can I just get a quick yes on how to trade commodity stock? Did you guys get that? A quick yes, please. Yep. Okay, fantastic. So, it's really imperative to have a big portfolio. If you focus on just a handful of currency pairs, you're really going to be missing out on opportunities elsewhere. Okay. Let's look at the pound Aussie dollar. Okay, pound Aussie dollar. Just wait for my indicators to load up. Right, pound Aussie dollar. Trend, consolidation, another move up. Okay, price is now currently finding resistance at the round number 2. And the figure 2 is a major area of resistance and support. If you look at past price action, that whole area has acted as an area of support and resistance. And you can see that price is stuck between resistance and between support. Price is stuck in an area of consolidation. Until it starts breaking out and giving us a clear trend direction, we don't want to be trading the pound Aussie dollar. It's untradeable at the moment. If we look at the weekly, we can see that we're trading above the weekly 200 moving average. We've got the green trend filter, but nothing of significance, really choppy. If we go to the daily time frame, trading above the daily 200 moving average and a very choppy piece of price action at the moment. If we take it back to when this was profitable, look at this trend. That is a trend through this period of consolidation. That is a trend compared to what price is doing at the moment. Okay, it's all very choppy. So from a trend trading perspective, I'm not interested in this. From a day trading perspective, range trading perspective, that's a different approach, but I'm a long-term trend trader. Okay, are there any more charts that you guys would like me to analyze? One thing you would have noticed is, what did I look at? I looked at the Aussie dollar, US dollar, the Aussie dollar, New Zealand dollar, the euro dollar, the euro pound, the euro New Zealand dollar, and the US dollar, Swedish krona. They were my first 6 pairs. Those are the only 6 pairs that I've been interested in since September of last year. That's the only pairs I've traded, including the pound dollar before I got stopped out, the cable. So 6 or 7 pairs, 6 or 7 currency pairs since September. My pip total, just to give you guys an idea, my current pip total is running at around 50,000 pips. Okay, 50,000 pips across 25 open positions, all taken since September. Right, dollar yen. Okay, I'll ask this to the group. Is the trend up or down? Is the trend up or down? Yep, the trend is up. Good. Now, is price at support or resistance? Right. So the trend is up and price is at resistance. What do we do? Go long, go short. Thank you. Beautiful. Yes, you guys are getting it. All of you giving me the same answers. I love it. The trend is clearly up. And look at the length of the trend, guys. The trend has been up since 2012. Up, consolidation, up, consolidation. Price is faced with major resistance with this pivot level, with the pink levels and around number 120. We need a break of this pivot level, and then we can start seeing price target new highs. I determine a breakout purely from a visual perspective. When price actually breaks out, I don't want a break. I want a break and a close. I want price to actually close above that level. That is when it's a breakout. If it breaks and comes back below, that's a fake breakout. Okay, not weekly. Daily is enough for me as well. Thank you. Okay, you're welcome. Right, weekly, we're trading above the weekly 200 moving average. We've got the green trend filter. Daily, we're trading above the daily 200 moving average, and we have the green trend filter. Guys, look at current price action since November. Can you see? This is simply range. This is in a range. Can you guys see that? Is that clear, guys? A quick yes, please. Can you see how this is in a range compared to the euro dollar? Yeah, it's very, very clear. This is in a range. This is not something you want to be trading until it starts breaking resistance levels. Then we can start looking interested in it. But remember, while this is consolidating, I've got a whole list of stocks and currencies that are trending. So I don't need to worry about this until it breaks out. Okay, last one. Someone's asked me to look at the New Zealand dollar, Canadian dollar. And again, I'll get you guys to do the analysis for yourself. once the indicators have loaded up. A quick yes or a no. Would you trade the New Zealand dollar, Canadian dollar? Yes or no? Good. Not till breakout. Good. The trend is up, and the trend has been up since 2009, but is currently faced with major resistance. That's the all-time high on this particular pair. So until it breaks the all-time resistance and the figure one, because we've also got the figure one acting as resistance, once it breaks this resistance and this resistance, then we can start looking at this. If we go to the weekly time frame, we're trading above the weekly 200 moving average, green trend filter, above the daily 200 moving average and the green trend filter. So everything is suggesting bullish strength, but we need to see resistance levels broken before we can consider this. Okay. Any final questions before I call time on the webinar, guys? Someone asked me about my stop losses, I believe. My stop losses can be as wide as 400, 500, 600 pips. I use very wide stop losses, but remember, I use compounding, so it compensates for my wide stops. People shouldn't fear wide stops. Put it this way, guys. Let's look at the New Zealand dollar, Canadian dollar. At the bottom, it says the average true range. So the average true range for 1 day, 5 days, 20 days, and 60 days. We've got the average true range here. So on average, the average true range is moving around 100 pips. That's 100 pips a day, 100 pips every 5, 20, 60 days. It's moving around 100 pips. So logically, if price is moving 100 pips a day, should you have a stop loss that's bigger than 100 pips or smaller than 100 pips? Right. So then why would people use 20, 30 pip stop losses? You see what I mean? Like, there has to be changes in people's approaches. People are using 20, 30 pip stop losses on currencies that have an ATR of 100, 120 pips. You've got to think about where your stop loss is. You've got to have some kind of mathematical formula that allows you a mechanical approach to calculating stops. There shouldn't be any subjectivity to it. And that's where ATR comes in. Is that clear? So going back, stops below MA. Guys, I don't use pivot levels and moving averages or anything like that to dictate my stop loss. I have a mathematical formula that calculates my stop loss based on ATR. Okay, I think that's it. I think you're welcome. You're welcome. You're welcome. You're welcome. Thank you. I've got a few private messages coming through as well. So thank you all very, very much. I'm going to direct you to, as always, I'm going to direct you to a few of my websites. If you guys are not on Instagram, or if you are on Instagram, please go to my profile, which is instagram.com/Zaheer.Anwari. And I put a lot of stuff on Instagram, a lot of charts, a lot of things that I'm trading, a lot of webinars. When webinars are going to be up, I put links to the webinars. I found Instagram a very useful way to sort of connect with people. I used to be quite active on Twitter. I am on Twitter. Where is my Twitter account? There it is. I am on Twitter, which is, again, Zaheer Anwari. So if you're on Twitter, you can follow me on Twitter. You can follow me on... yeah, I've got one or two selfies. But that's not me, hey. Okay, but yeah, I've got a few pictures up there with friends, family, etc. Yeah, I got a pet dragon. For most people, some people know, but yeah, I'm very much into my reptiles, so I've got a dragon. Sorry, yeah. So social media, we've got Instagram, we've got Twitter, and also if you go to my website, which is thetraderscosmos.com, if you go to blog and then trading contributions, then I've got links to all the different websites that I contribute to. Okay, and if there is anything else that you guys would like to contact me about, if you're interested in actually trend trading and wanting to take your trading to the next level, wanting to know more about the software that I use, eSignal, anything that involves trading, please contact me through my website. So go to thetraderscosmos.com and then click on contact us, and that will take you to a page where you can then get in touch with me. Okay. Thank you, guys. I hope you've had a brilliant day, morning, wherever you are, and I will be in touch on the next webinar. Okay. Take care. See you later. You're welcome. Take care all. Take care. Bye-bye.